Ladies and gentlemen, 21st October, Friday. 10-year yield has just reached 4.25% as of right now. My goodness. This is not a good sign because now we have a single day biggest upside. Alright, and this is going to continue. And what's the reason? I am speculating that it's BOJ behind it. Why? I'll tell you more in the detail. So let's just look at the market. But before that itself, guys, this is not going to be good, okay? Now, disclaimer apply as usual. Please make sure that you do your financial planning, okay? And thank you, Ames, for the kind sponsorship. Now, before we go into the 10-year yield, let's talk about something that is ongoing right now. Liz Truss, okay, is now definitely the lady of the hour. Well, because just a day ago, she said she's a fighter and she's going to quit, right? But today, she quit. Okay, that is something that, wow, okay. So, Liz Truss has become UK shortest serving PM, forced out after just 6 weeks, okay, just for 45 days. And of course, now everybody making a joke out of it, and it seems like everybody feels that she has made a fool of herself. But if you look at her policy, it's not too bad, honestly. But it's just that her party is not going to help her much, and that is the reason. But the good thing is, according to some, I just saw the article, she's going to be nicely for the rest of her life. Yes, 115,000 pounds every year be given to her until her end of her life. My goodness, that is pretty good, right, for a PM. That's why I said that it's going to be a UK PM for 45 days. Alright, so who will be taking over? Now, there are a lot of candidates, but the one that everybody looking at is this Rishi Sunak. Alright, this is the guy. But of course, they are also speculating that this guy, Boris, is coming back. Okay, so well, I'm not too sure who will be the one, but I can't deny that within these two gentlemen, most likely that's a fact. Okay, and of course, again, a joke is that this guy has a joke, and it's really seemed that within just 4 months, we have really the 4 chancellors, 3 home secretaries, and so 2 PM. This is really incredible. So that's the reason why now everybody is just talking about that. Now, moving to China, China, everyone is talking about this right now, is waiting for China GDP. So what's happening now in China is that China GDP has never been delayed, but this time now, because probably due to their 20th Congress meeting, it's been delayed. But of course, everybody is saying that maybe they're trying to cook the books. So we know that China now have lost a lot of investors over the last few months, and that's why the index is coming down. And you can see from the chart here, it's pretty clear that ever since it lost the 15,000 level right here itself, that is just in early July, the market has came off quite a fair bit, almost 2,500 points. Now that's more than 15% in just less than 4 months, okay? So my point is that I still believe that the market, China A50, will go down below 12,000 a month, and I'm confident that this is going to break the market. So now the last time we saw this was back in March, so most likely traders are going to bring it down. Now we did see the the plunge protection team coming in back then here, but you can see that it took 1, 2, 3 days to bring it up, and 3 days the market just sold it off. So that actually tells us a lot that the selling is going to continue. Okay, now we move to the next one, is the 8th of November. Take note, that is the midterm election for the US. And we all know that, right? The 435 House of Representatives, okay, it'll be up for election, and of course 35 for the 100 Senator. And of course, the last time Democrats won the House by 222 to 213, okay. And of course, in the Senate, we have a 50-50 tie, but of course, Kamala Harris basically got the casting vote. Okay, so now we move forward. Now we all know that since Biden come on, the gasoline price has shot up, okay, by as much as 60% since Biden. So the thing is this, people are not happy. Inflation is still ongoing, so that means that we're going to see a problem coming up. So now, based on some forecasts, they are saying that Democrats have a 61% chance to hold on the Senate, and the Republican have a 75% chance to control the House. Okay, so in short itself, there could be some changes, and based on what I'm seeing right now, and this only 8th of November coming in, I don't think that Biden has much chance, okay? So, let's look at the economy right now. Jeff Bezos just came out and says that the probability in this economy tells you the better down the hedges. So in short, meaning that he is not comfortable with the current situation. And of course, in Bloomberg, we just saw that there are ongoing speculation or confirmation that there's a US recession within this year. Okay, and I've been saying this since January that it will likely be happening. And of course, we have JP Morgan, which came out recently and says that, okay, there's troubles ahead and they're going to be very serious. Okay, so of course, all this thing itself is not very new to us right now because we've seen this before. But let me explain this further to you, okay? The share of good categories recording positive year-on-year growth, right, in the real spending. In short itself, right, we are seeing that the spending is coming off. And when spending is coming off, usually you see that this index, once it hit the 50 zone, is almost every time we will see a recession. The one in gray is the recession period. And of course, we are now at this area, so it's undeniable we're going to have recession coming in. So if recession is coming in, what do you expect from the market? So of course, the equity market will be affected. Now, this is why I'm saying that the Federal Reserve, right, will really need to do a lot of things right now. Let me explain this to you. Okay, so the one in orange is the unemployment rate, okay? Now, the one in the candlesticks is the S&P 500, okay? So we go back all the way to year 2000. Now, you notice that only when this happened, okay? Only when you have a bottoming out of the employment and when unemployment start to go up, right, you notice that that's where the stock market actually comes off, okay? So it's pretty to understand, right? It's something not too difficult, okay? But then again, this is where it get very incredible. Watch here, guys. So same thing again, that was back in March 2000, okay? Then what you have in April 2007, that was where you can see that we have the unemployment start to go up, right? Yes, unemployment start to go up, and of course the stock market after a few more weeks and months it started to come down, and it came down pretty hard. Okay, got the idea now? Okay, so the thing is this, you can see that back again when the unemployment data shot up, right, because of the pandemic, because that was where the pandemic happened in year 2000, and of course the stock market collapsed. Okay, so the question is this, now we can see that the market is back again to this level, okay, and we can see the stock market already been reacting. Okay, so of course we all know that the reason of this reaction is because of the earnings. We know that it's inflation, we know that it's interest rates and stuff. Okay, but we haven't seen this yet. And the thing is that you may say, but Cal, if the economy is doing well, why can we have unemployment? Well, that were all based on Federal Reserve. Apparently Federal Reserve have said that they really want the unemployment data to go up. Right, no kidding, they want it, because only when they can do this, when they can actually have a unemployment going up, right, that is to cool the labor market. And if the labor market goes down, that means that inflation most likely will pull back. Because when a lot of people is working and all striving itself, right, inflation just keep on staying there. So if Federal Reserve really want to bring inflation down to 2%, which is something that they've been saying, then I'm so sorry, they have a long way to go. They had to really bring this up. So by bringing the unemployment up, then of course, based on history, we have to see the stock market coming down. But of course, the thing is this, some people are arguing that maybe the market has already reacted. Well, I don't find this really, because the thing is that you cannot deny what is real. So which means that once people start to lose job, unemployment is everywhere. Example, let's say go up to 4% to 5%, that means that business earnings will be affected, right? That's for sure. So definitely the PE ratio will be affected, hence things will have to come off. Now of course, with the market coming off more than 20%, if this really goes up, let's say the unemployment goes up to 5%, maybe another 10 to 15% will be good enough. So if what we are where we are right now, S&P is at 3666, then maybe we see another 10% drop to 3,200, maybe that will be pretty good, okay? So that is why I say that that's something that we have to pay attention, and still is still ongoing right now, okay? Now, of course, the thing is that the people are also asking themselves, right, why don't we just buy bonds? It's cheap right now, right? Okay. Now, the thing is that the classic 60-40, whereby people are buying bonds and stocks, okay, and this strategy seemingly is now at the worst return. Now, think about this. Worst return, what does it mean then? That means that, right, the last 100 years itself, right, anyone uses strategy would have profited okay, but now it's so bad, it's the worst return. And you can see right now, it's worse than what we happened in 1929. Oh my God, we are worse off than that. So which means that this strategy is not going to work. Now the question will come in is that what if we change it the other way around? Okay. Now we'll really look at this with another different angle. Okay, let's take a look here yourself. Okay, Jeffrey Gunlock, right, the bond king, is saying that, okay, let's just take a look at this here, everybody. Okay, now the treasury bond is 2 years is giving at 4.52, 5 years giving 4.37, but interesting, 10-year is 4.13, 30 years is 4.13. So by saying this, it was about 18 hours ago, Jeffrey Gunlock is saying that maybe the sign of yield has exhausted. Now, I totally disagree with this. I'm pretty sure he must have long quite a fair bit, because now, as of now, is 4.25% as of now for the 10-year yield. So which means that he got it wrong. So this is where it get very scary, everybody. This is where it get very scary, because now let's take a look. I believe that there will be a financial Armageddon, okay, coming in very fast, very soon. Now, the thing is this, I've been saying non-stop, like a broken recorder, that we're going to see a 4.5% of 10-year yield coming on board. Okay, I've been saying this for the longest of time, and I told you that once the market recently has pulled back, right, once you got the base out, look at it, look at the way the algorithm is doing this beautifully. Look at it, the way they make this line. My God, I started drawing this line when it was like 3 to 4 bars here, and when I extend it up itself, look at it. This is very mechanical, and this is telling you that there will be more movement. And of course, if the market really hit 4.5, then of course there will be initial knee-jerk, okay, on the equity market. So that is where I want to tell you something that is going to be very scary right now. Everybody pay attention. Okay, now look at this. Okay, now this is the 10-year yield which I collected just yesterday when I do this PowerPoint and update with today's number. The thing is this, look at it, guys. Okay, look at it carefully. The 10-year yield as of yesterday was 4.27. Okay, the 5-year yield is actually the one that is, you know, smaller, right? So by right, you have a higher yield that is pretty normal. But the thing is this, watch it carefully, guys. Look at this. Look at this, okay? My God, okay? All of them right now, all this are all higher than the 10-year yield. Normally, when you have a longer term, you should have a higher yield. But this time around, this opposite. All right, it's totally inverted. Now, this means that something's bad going to happen, because we always know in Economic 101 that a higher, longer time duration bond will have a higher yield. But now we have the opposite thing, and it's all of them doing that. Are you telling me something is wrong here? And of course, we all know that the yen has hit 150 as of today. And the question is this, BOJ will likely have to come in, because this is ridiculous, because it is like the dollar is literally killing the Japanese economy. But the thing is this, what can they do? Now there's two things they can do. They can offload a lot of dollar, which is about 100 billion left, or they can really offload the bonds, the treasuries that they have. Now the question is this, if they really unload the treasuries, then what will happen to the yield? Now you understand why it's so I suspect that the yield today is moving up like that now is because the BOJ is basically releasing their treasuries, the US Treasuries. That's why you can see that the yield is moving up at a rapid speed, okay? Because you cannot expect the Japanese government to increase interest rate, because they will not do that. That will kill them off faster. And I mean, the dollar that they have is now $100 billion. What more can they do? And the last time they did an intervention, remember, it didn't go out fine. Within 14 trading days, the market just recovered. So the only best way is to release the treasuries. And that's the reason why, think about this. Imagine now, if we go back the tape again, imagine if the yields start to go higher, and we all saw before, whenever the yield goes up itself, what happened to the stock market. So that is my fear. So I believe that this one is a Friday, and Monday, Tuesday is going to be like a weekend. I'm just going to tell you guys, just be very, very careful, because something might happen on a Black Monday. You never know. All right, let's look at the market now for the quick one, guys. Okay, let's take a look right now. Now, this is my Dow Jones chart, and I tell you this before, my 5% chart is brilliant, okay? Look at the accuracy, it's incredible. This is all computed numbers, okay? Now, the thing is this figure here itself is at 30,487, and yesterday the Dow has closed below that, so most likely the Dow is going to go down. I believe the Dow is going to come back down to here at 29,563. So from here to here, it's about 700 to 800. There's a lot of money if you know how to utilize this. And of course, the RSI is brilliant. It's stopping here itself. So this is the RSI versus the common point here. This is the RSI again, common point, but the market is lower, right? So this is actually a telltale sign to sell the market, okay? You should be very careful on this, okay? All right, this is what I have for the chart here. And look at the China market. You can see that it tries to recover yesterday, but it failed. This is bad news for the Chinese market, and I suspect that it will come down here 12,280 later in the afternoon. All right, and of course we look at the TWB chart right now to get some insights of this. Let me just refresh this just in case. Okay, done. Okay, today we have a DJDD. Now DJDD stands for Doji Directional Day. Hence, therefore, if the market stays below OP, it will be a sell, right? Okay. Next, below MLP is a sell, right? Yes. Then below pivot 2 is also a sell. So triple sell here. And earlier, if you look at the chart, the market has purposely just now tested the pivot 2 and then pulled back right here. And that was where the yield shot up. Okay, that was where the yield shot up. So that's the reason why I believe that once the market comes here, this is the BNB support RL level, resistance and support. This level is at 30,187. Now, if the Dow Jones pull back, okay, it will have to touch 187 first. If 187 holds, okay, we can still see some support. But if 187 breaks, then I'm so sorry, I think that we will see 29943 happening probably next week. But the only thing is that at the moment now, my indicators, KSI, Big Boys indicator, KRW, the weightage indicator, both of them are still pretty bullish. So that's the reason why, even though the market has pulled back from the high, but it's still maintaining around this area. So I'm not surprised that this market will hang around here. But once my indicator, my KSI and my KRW turns red, guys, you really need to run, because the last time we saw this as well, when KSI and my KRW turning red, my god, the selling was really, really bad. Okay, so this is something that you need to take note. Now the Nasdaq is also saying the same thing right now, and today the Nasdaq and the KRW are both in the same direction, although this is flat, but from cyan to flat is considered negative. KSI is negative, negative plus negative, we have selling. So today, if the market loses 10,931, there will be some selling on the Nasdaq. S&P 500 also show the same thing, but both indicators are supporting, having a bit of mixed bag signal here. So the support for 3641 will be for the S&P 500. Now, the Hang Seng most likely will be affected once the China markets are to sell. Now, yesterday we had talked about that when there was some speculation saying that there will be some potential COVID unlifting restriction, but it came out that's not very true. So market took and sold off, right? So today the market is now trying to hold its water, but if the market loses the MLP, maybe we may see 15,000. Now the market has been staying above the 16,000 mark for quite a bit of. I've been trying to stay above it, but once it loses that, that could send a selling wave all the way down to 15,733. Now definitely is Nikkei affected. Definitely Nikkei will be affected. If the yen still can't find a reprieve, then most likely the Nikkei is going to test the 26,825 or the MA30 at 26,831. Okay, and of course the crude oil market. Now I've been telling you guys to just avoid crude oil for a while. Yesterday we have a strong rally on the crude oil, and it just basically flushed back down again. Now the market is definitely supported at this BNB SL level at 84.27. Okay, if the market stays above this figure, fine, because the this level itself is quite important, because both MLP and MA30 are all there. Now, if the market loses the 84.27 support level, today the first support will be back here itself at $83. Now, do note, I still think that there's a good chance that this crude oil can come back down to the $80 mark. I still believe that it's going to come down to this $80 mark. At the moment, the boys indicator is selling, but my KRW is still positive. That's why the market is dragging. We don't have a clear shot at the moment. All right, and last but not least, we're going to quick one on Bitcoin. Bitcoin here itself is now trying to hold, but KSI and my KCX are both in a negative position. So which means that if the Bitcoin can't stay above 19,107, we may see Bitcoin coming back down to 18,807. And this weekend, I just got this tingly feeling that we may even see 18,472. All right. So guys, I'm not calling for a market crash, but the yield itself is definitely moving up. Let's do a quick one on the yield and see whether can we get something something out of this. If not, alright, I can't get it up. It's okay. But take notice how it's 4.25 right now. Guys, go slow and be careful. This is Kel signing off. Have a great weekend. See you on Monday. Bye-bye.